China's humanoid robot revolution vaults onto the market as Unitree surges in its blockbuster listing. It's fueling bets on the next AI breakthrough that won't just talk, but walk as well. Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. The Kospi tumbles as surging yields hammer Asian chip stocks and raise fresh concerns over the big tech spending boom. Treasuries steady after a sweeping bond sell-off. Oil pushes higher as President Trump's hardline on Iran keeps Hormuz tensions front and center. With no breakthrough in sight, markets brace for tighter energy supplies. And veteran oil market watcher Fereidun will be joining us to explain why he thinks product shortages, not crude flows, are the clearest signal for energy markets. And South Korea pours funding, chips and talent into its sovereign AI race. We speak live to one of the three finalists. Moon Tae of LG AI Research will be joining us with its game plan to come out on top. China's insatiable demand for AI-related primacy issuance is once again in focus as Unitree shares trade sharply higher on debut in Shanghai. Meanwhile, Baidu and Xiaomi are going in different directions after earnings reports. For more on these dynamics in the Chinese market, let's bring in Bloomberg markets reporter Anthony Stevens. And Anthony, how important is this Unitree IPO, and what are some of the ramifications of such a robust day one?
Yeah, it's a resounding kind of emphasis on China's top-tier technology products, right? So this is a robot that is obviously very photogenic, but it's also part of the humanoid robotics embodied AI push that China is kind of really focusing into. Bear in mind, this plays to China's strengths on the manufacturing side of things, away from some of the weaknesses it has on the chip side, right? So this is a very important IPO in terms of validating China's economic growth. Now, in terms of the actual performance as well, you know, it has sold off very significantly from a very big open, and that just serves to highlight the kind of euphoria the domestic investor base has for AI, right? They're willing to buy this stuff at any price. This IPO was massively oversubscribed, and then clearly people chased it into the open of trading. So that's very important in terms of establishing animal spirits within the Chinese stock market for these new listings. And why that's important is there's plenty more new listings to come in this space. Just as we went to AI, you know, there's more speculation that YMTC is coming up soon. That's China's NAND player that recently became one of the top 3 NAND players in the world. So China's tech ecosystem needs local retail to be bulled up about its prospects because it faces some structural capital shortage challenges vis-a-vis the US, right? There's a lot of uncertainty around foreign investors investing in China, and they need their local retail to make money like this from IPOs. CXMT was another great success. So this kind of flywheel of capital on the equity capital markets is very important.
I love that these robots are photogenic, you say. What are we learning from the Chinese results season?
Yeah, we're learning that life is a lot harder in the legacy China tech, right? Let's start with Baidu. You know, this is one of the old leaders of China tech, right? That China's Google, quote unquote. They were early off the blocks on AI as well, and they had a lot of success with that. But they were doing it in a closed model architecture, right? And now as China moves to open weight models, they're getting left behind. And they are not making enough money from their cloud infrastructure. This puts them in a very negative contrast with the likes of Alibaba, for example, that are making money from this cloud infrastructure. So that was a big part of the earnings call. Also, there is a lot of focus on them spinning off their chip unit, and there was precious little detail about when that was going to happen, and that impacted the share price as well. So we are seeing the street downgrade. Morgan Stanley is downgraded, and a raft of others have lowered the target price. So what it will take for this company to punch out of this kind of malaise is more focus on the AI return on the cloud space and some updates around the chip unit spin-off. Now, on the completely other side of the coin, you have Xiaomi. This stock has been in a 1-year downtrend as people have been worried about EV competition and the price of chips. But they've powered through it a little bit with some operational efficiency. Their new phones are doing well. They've kind of drawn a line under some of the losses related to chip prices. And the street is way too short this name as it stands. So you're seeing Xiaomi actually lead the HS Tech today back up to kind of a flat performance. So HS Tech is actually outperforming the regional sell-off on the back of Xiaomi. So you really see this important bifurcation in Chinese markets based on the execution of technology strategies. It's not one size fits all.
Anthony, thank you. Bloomberg Markets reporter Anthony Stevens. Let's get perspective from Tai Hui, APAC Chief Market Strategist at JPMorgan Asset Management. Tai, good to have you with us. Thanks. Unusual to have you in this studio.
Great to be here.
Anthony, talk about bifurcation in the Chinese market, especially in the tech space. How are you reading that?
I completely agree. I think what you have is a lot of these legacy hyperscalers or internet giants. I think they are obviously investing heavily into artificial intelligence, but at the same time, they are dealing with a macro environment that continues to be quite challenging. We've seen consumption data, we've seen production data. While the export sector is doing really well, I think domestic consumers are not feeling that benefit because of the ongoing correction in the housing market, but also the job market continues to be quite challenging. So I think it's still a matter of time before these companies are able to deliver the earnings improvements, making use of artificial intelligence. But I would argue that at this point in time, whether it's robotics, whether it's hardware, whether it's pure model developers, I think they may get more of the attention because they are generating new ideas. And frankly, I think there are more exciting new opportunities and applications.
Are Chinese AI players getting hit differently? I mean, we saw how Baidu shares got hit because of higher capex. But in the US, higher capex means that they have the ability to keep growing and investing in infrastructure.
Well, I think the capex part has to be done. They have to keep investing to stay in the game, both in the US and China. But I think the question then becomes, how do you monetize it? Where's the revenue coming from? Now, in the US, we are starting to see early signs that developers are generating revenue, and that helps to sustain that narrative of why they should invest. I think in the case of China, the monetization, especially with consumers, tends to be more difficult. I think they can do a better job with the enterprise applications. So I think from that perspective, we still have yet to see real evidence that these companies in China are converting their capex into actual revenue and earnings going forward.
Talking of real evidence, why is Korea getting hit hard today? It's down about 6-7%. I know it's a drop in the ocean when it comes to the gains that it's had so far. But what's being seen differently this time around?
Well, I think Korea typically magnifies what happens in the U.S. overnight. So we did see a correction in the markets in the U.S., and to some extent that's brought by rising yields, but also I think maybe it's investor positioning rotating into non-tech sector. Ultimately, the U.S. economy continues to be in reasonably good shape. So, we could see some rotation away from technology into a non-tech part. And then as a result, that impacted on South Korea, to lesser extent Taiwan. I think we could see this type of behavior going into the fourth quarter. Ultimately, the narrative of AI continues, but where the applications, where data center build-outs, I think there's still some uncertainties from that perspective, and that could still be impacting on Korea and Taiwan, although we're still optimistic on these two markets. So
buy the dip? And when do you buy the dip?
Well, I think we can continue to accumulate during correction. So we may not want to allocate all our capital in one go. So averaging in is a pretty good way of weathering through the volatilities. But to us, the fundamental of these companies are important. A, their technology gap relative to competitors continues to be very large. That moat is very deep and wide. And secondly, even if hyperscalers in the US start to slow down their capex, which we don't think they will imminently, but everyone now starts to still build data centers, the demand for semiconductors, memory chips continues. And the shortage right now is not going to be addressed anytime soon. So the pricing power, the demand, I think, is still in reasonably good shape. And that's why we're still pretty optimistic on both Taiwan and South Korea.
You talk about a high-yield environment. It is a high-yield environment, right?
Yeah.
We see how 30-year yields are close to 20-year highs. I'm just wondering why stocks are still untouched, undisturbed by these higher yields, and what would that take?
Well, I think the good news is the U.S. economy, the global economy, despite everything that's happening right now, especially in the Middle East, is still in reasonably good shape. So, sure, high yields will put pressure on any companies and also households if they have debt. But if the economy is growing, if income from a household perspective continues to come in, and companies still making money, servicing that debt is not really that big of an issue. And therefore, I think that's how I would explain why this recent rise in yields have had a manageable impact on the stock market. Now, of course, if that rise in yield is rapid, is very aggressive, that could obviously create more volatility in the market, because it's not only about the fundamentals anymore, it's about how you calculate future cash flows, how you justify valuations. That calculation get disrupted. So, look, I think we have to be mindful of the potential volatilities coming through from rising yields, but again, from a fundamental angle, the current growth momentum is good enough to help the stock market weather through the rise in bond yields.
Do you see 10-year yields getting to 5? Would it matter? Would it matter for the dollar?
I think the conditions to get there is a couple of things. One, obviously, what's happening in the Middle East continues to be in a very difficult situation.
And it is a difficult situation.
It is a difficult situation.
It's month 6.
It's month 6, but you're looking at still an ongoing negotiation. So I think that, well, the hope is that we will see a reopening of a strait, but at the same time, we have to recognize that throughout the last 6 months, whether it's in the Middle East or other oil producers or other oil consumers, everyone's tried super hard to adjust to this new situation, whether it's Saudi Arabia exporting more via the Red Sea. We've seen inventory correct globally. We've seen China also adjusting their inventory build-out. So I think, we've been going through quite a resilient environment because everyone really tried super hard to adjust for this new normal. Obviously, if the strait remains closed and the energy market continues to be disrupted for, let's say, another 3 to 6 months, we could see energy prices creep up. And that, to me, could lead to a higher bond yields. And does that matter? Of course it does matter, because if you see, for example, 5 handle on a 10-year, I think you will start to see, as I mentioned earlier, how people need to recalculate valuations, how they recalculate cash flow, and that directly impact on the valuation of stocks. So you could see a bit more volatility in the stock market around the world.
I'm just wondering if there is a little bit too much complacency. We're headed towards the winter months. And although crude prices seem to be manageable, if you take a look at diesel, we're seeing cracks already. So we could be seeing inflationary pressure coming faster than anticipated.
I think we have seen this type of inflation pressure accelerate, decelerate in the past few months. For example, you mentioned diesel, which is a great example. If you look at gasoline prices in the US, before the war is $3 per gallon on average across the country, or on average across the country, peak at $4.50. Right now it's about $4. So again, all these are feeding into the inflation calculus, and that's partly why we've seen a lot of Fed officials are focusing more on the inflation threat and talking more hawkishly compared to 6 months ago. But at the same time, I think the difficulty for the Fed going forward is, sure, they have to deal with inflation, but because this is a supply-side shock, the negative impact on consumers, on business, as we mentioned earlier, how will they deal with it? Because you've got one tool, which is interest rates, but you've got 2 diverging objectives, high inflation and arguably weaker growth. Which one do you address first? So I would argue that the Fed is actually facing a very significant dilemma in coming months if we continue to see, as you mentioned, diesel price continues to rise, gasoline price continues to rise, but at the same time, raw materials, petrochemical supply is disrupted, and that eats right into production. I think that's going to make the Fed and central banks around the world facing a great dilemma.
All right, watch this space, Tai. Good having you with us. Tai Hui, APAC Chief Market Strategist at JPMorgan Asset Management. Still ahead, we're live from the Seoul AI Summit with South Korea's push to build homegrown AI models and how it's positioning in the global AI race. Keep it here with us. This is Bloomberg.
We're not here to replace the NVIDIA's product and the technology. Rather, we wanted to find some way to coexist with NVIDIA. And that's how and why we got the investment from Korea government. We understand the value of the ecosystem. No one single company can win in this domain and industry.
The long-term guess is that we have to make some open source AI for our internal use and making the Korea get the kind of key position between the China and the US.
Some of our guests from the Seoul AI Summit now underway in the South Korean capital. Well, joining us now from the event is Moon Tae, head of Superintelligence Labs at LG AI Research, is one of 3 finalists in South Korea's National Sovereign AI competition designed to secure Korea's technological autonomy and reduce reliance on foreign systems. Moon Tae, thanks for joining us. We talk about how Korea is building its sovereign models like NexantECA. In practice, what does sovereign AI really mean?
It's a Korean government unique strategy to encourage and support this IT industry more about the foundation model building. And it's a non-trivial work, and the government try to support some promising companies to make better models.
Is there a contradiction, though? Because even as Korea tries to build its sovereign AI models, it's deeply ingrained in the global supply chain. It's still reliant on US chips.
In terms of the flywheel, Korea also has their own chip design and chip production. So even if that may not be as the same level of a power and capability for now, it's growing, and it's actually growing as an association with our X7 model and other models in Korea.
How long do you think that process might take?
Starting from the beginning, it may be as powerful as the other combination, NVIDIA's GPU and the current state-of-the-art model, which performs very well on that GPU architecture. But over time, we try to design our own chips, and we try to test our own models on those chip design, eventually get the better and more efficient and more capable, and that's the future.
So, Moon Tae, is it fair to say that Korea is trying to be the third pole in AI?
Yeah, so it's like a strategic decision. To reach at a certain capability, we need a strong resources, and sometimes some part of the data can be shared across different model building strategy. So Korean government try to help us a lot, and not only the LGA Research, all other promising companies for expediting this process, and that's eventually going to resonate with this chip industry as well.
We talk about how LGA is one of the 3 remaining competitors in this race. What really is your strategy for NexantECA?
For the NexantECA, the model name itself stands for, we try to build a better model for expert, to make the expert more advanced expert. So like when we build the NexantECA, we try to make this understand all the Korean culture, Korean themes very well, but at the same time, it is very capable of the reasoning capability, and it's understand very well about the manufacturing stuff, which is for the LG affiliates. So this, rather than just focusing on one specific stuff, we try to consider the Korean ecosystem and industrial building block, and try to make this as one model, has a general capability.
From this competition? In what way have you gained from this competition?
So as explained, given the Korean government support about the computation power, and we try to efficiently decide the model size. Especially this time, we try to extrapolate and stretch the model size to prepare the final stage. And we make a very efficient strategy, some unique algorithms, and unique part of the architectures, and build these efficient models.
As you take a look around you, how will you describe the outlook for AI in Korea? How encouraged have you been?
So, starting from this competition, I guess this will provide very good building block. No matter some company get out of this competition or alive from this competition, this experience will be building block and eventually combined with a lot of other industries and the hardware design as well. So this is very unique strategy that can make a foundational building block which can stretch for the next few years.
In terms of frontier AI, we know that countries, including the likes of China and the US, are spending enormous amounts of money. Can Korea compete in frontier AI?
That's in one side, maybe the amount of money they invest, it may scale very well with the data, and the amount of data has been the major contribution to the scaling power of the model. But starting from the last year, we also found that how to design the harness, environment, the system to more efficiently use this model and more aligned with the expert task and more aligned with the human judgment is also matter a lot. So given those findings, while our investment in terms of the total, it may not be as large as US investment or the China invest, but still we are on the way and we are discovering the new way to evolve our models.
Would it make sense for Korea to actually pick certain sectors, certain areas that it can lead in?
So, yeah, it would be great that if we can all on the same table try to think about what would be the next important step so that we can better invest or sometimes mix and match or split the work into the couple different sectors. Still, we are on the stage of building one generally capable model, but soon after this competition, we are going to be on one table and talk about what would be the next step. And as long as I know, Korean government, they already try to design many of these important factors to stretch out the next stage.
We've been talking about super intelligence. Talk to us about the path to super intelligence. Is it about agents? Is it about bigger models? What is it about really?
Yeah, everybody has different definition of a super intelligence. What we have seen so far is when we scale the model parameter, it's more capable, and sometimes we see the emerging capability. But these days, starting from getting the knowledge and question answer, it's now covering some actions and designing new code and new agent like that. And the future of these, beyond the action, it's going to combine with the societal design and all these, the physical environment as well. And that's going to be the path to the super intelligence in a big picture. In a narrow picture, we try to define some every specific domain where this general model is not yet capable of. So given those specific domain like financial, legal, bio, we try to model which performs very well, and then eventually try to bake that as some environment which can work with the general model to improve their performance as well. So it's kind of like a flywheel, general capability and improving the capability in a specific model,
right,
and then communicate each other for co-evolution.
Moon Tae, thank you and good luck. Lee Moon Tae, head of Superintelligence Labs of LG AI Research. Coming up, our next guest says oil traders may be focusing on the wrong supply story. Keep it here with us. Welcome back. You're watching Insight. Oil is trading higher for a fourth day after President Trump said there are no ongoing talks with Tehran. It leaves the conflict in the Middle East and control of the Strait of Hormuz stuck in limbo. For more, Bloomberg managing editor Jill Deeses joins us now. Jill, what's going on?
Well, Haslinda, I think at this point, this is kind of turned into what one expert described to us as a war of attrition. You've got what seems to be no talks happening between the U.S. and Iran. That's at least according to Donald Trump. I will point out that his son-in-law, Jared Kushner, was earlier on television saying that there were some level of active discussions, but according to the president himself, that seems to now be over. Obviously we've seen some of that upward pressure on oil prices as at this point we're left with a lot of uncertainty, a lot of questions over who exactly has control over the Strait of Hormuz. At this point, shipping levels are still far below pre-war levels, at least in terms of visible traffic here. But it does sort of set us up for this idea that we could be heading into a prolonged struggle without any kind of clarity over what things are going to look like in even just a few days or weeks or maybe even months from now.
And Jill, there are other developments as well. We heard from the UAE now cutting off trade, commercial exchanges and financial transactions with Iran. How much clarity do we have?
Yes, that's right. So this is a result of what the UAE says were some targeted missile attacks against it by Iran. Iran has denied that it fired missiles at the UAE, but given this confirmation that we've got out of the UAE, what you're looking at are potentially some of the first direct strikes that Iran has taken against the UAE since May. You had some other attacks that were targeting some UAE-linked vessels, but again, just kind of heightening some of those tensions throughout the region. I mean, at this point, Haslinda, I think the best way to look at this is, we were in that, maybe ceasefire period. Obviously, that was violated several times before it formally ended yesterday, or rather Monday. But you do have now what looks like some of these proxy fights that are still unfolding throughout the region that do threaten to escalate, including, some of these comments from the UAE just now.
Jill, thank you. Bloomberg managing editor Jill Deeses. Let's get more with Fereidun Fesharaki, Chairman Emeritus of FGE NexantECA, an international energy consultancy. Fereidun, good to have you with us. Conflicting signals. The U.S. says the Strait of Hormuz is open. Iran says it's shut. What's going on there?
Well, we can count most of the ships which go through. Before the war, there were 15 million barrels per day of crude and about 5 million barrels of products going through. At the moment, based on the data that are observable, about 5 to 6 million barrels per day are going through, and we believe there is another 2 million barrels per day, which is quietly going through with the AIS systems switched off and ship-to-ship transfers. So about 8 million barrels per day is going through. About 3-4 million barrels per day is going through the pipeline systems, through Fujairah or Red Sea. So actually, the situation is not as bad as it looks. It's probably about 11-12 million barrels per day of crude compared to 15 million barrels per day before, but almost zero movement of refined products.
In terms of the crude flows, do you expect that to pick up, or this is the level we should be seeing in the coming months as long as the situation in Iran continues?
Well, I believe there is a high likelihood that the Iranians will attack the U.S. interests. By U.S. interests, mean the U.S. bases, and they want to engage in a war. This war of attrition, the way it is, the U.S. says, okay, I will keep the blockade going, and I will deprive you from all your income, although the Iranians have some volume of oil outside the straits that they can sell, but they cannot last more than a few months, 2-3 months maybe at the most. So they want to bring things to a head, and to bring things to a head, they want a war which will result in a peace. And since the U.S. shows very little interest, there is a high likelihood that they would initiate it so that they can come to some agreement, because the way it's going, the Iranians are choking under the pressure.
If Iran were to carry out the attacks that you talked about, what impact would that be on the energy market?
Well, the impact, of course, would be that even that volume which is going through the 6 to 8 million barrels per day, which is going out, that would be disrupted. There would be an impact on them. But the Iranian regime is looking for a crisis so that they can maybe have something coming out of it. Because the way it's going out, even in Iran today, the gasoline is short. They cannot import gasoline. They cannot produce enough gasoline in the domestic market. The system is choking. It cannot continue to last. They want a crisis. And the U.S. actually is in a very strong position of just sitting there and doing nothing.
Fereidun, you made the call, you made the right call when it came to the U.S. attack on Iran. When might Iran's attack on U.S. interests take place? What are the leads telling you?
I think a week or two, it's imminent, because they cannot accept the situation as is. As is, it's not an option. They either want to have a peace agreement or a war, or something which would then lead to some internal harmony, because internally they are fighting among themselves. So they need a crisis, and I think the crisis comes from attacking the U.S. interests. I don't think they would dare attack the Israelis, because the Israelis will go after the leadership. But some crisis will be created by Iran, I think, in the next week or two.
Fereidun, I'm currently taking a look at oil prices. Brent crude at 91.64, New York crude at 85.61. Previously, you've called for oil to be at $150, even $200 if the war were to persist. We're into the 6th month of this war. We're nowhere close to the levels that you're calling for. What would it take for that to happen?
Well, at the moment, the oil balance is not so bad at all. Because, as I mentioned, there are about 10, 12 million barrels per day of crude flowing out currently, as compared to 15 before. So there is a problem, but it's not a huge problem. The problem is on the refined products. There is almost no refined products going out. The price of refined products have responded to fundamentals, while the price of crude is responding to sentiment. Essentially, crude and products are not decoupled. And as you mentioned in the opening, we are looking at the wrong barometer. We have to be looking at the refined products as a measure of the crisis in the oil market. Today,
so how bad is it? How bad is it? If you take a look at the refined products, how bad is it?
Well, the U.S. is, of course, the best refined product market. The diesel cracks are $100 above crude. In Asia, is about $40, $50 above crude. The gasoline is very high. Jet fuel is very high. Even the fuel oil is high. So you can see that the prices are in the $150, $200 range on the refined products. And on the crude side, they have not moved. They are really not moving with the fundamentals, but they're moving more with the sentiment and the hope that there will be some kind of a deal.
We've been tracking the diesel market, and we're seeing cracks right there. How much higher do you think diesel prices can go?
Well, the market is being choked at the moment. The Ukrainian attacks on Russia are making a huge difference. About 2 million barrels per day of Russian refineries are out of commission. Some people say 4 million, but part of the refineries are still working. So based on the working parts of the refinery, about 2 million. 2 million barrels per day of refined products in the Middle East are out of commission. Although even if they were producing, they couldn't export because the Strait of Hormuz previously accommodating 5 million barrels per day of refined products. Nothing is going out. So it is going to get worse and worse and worse, simply because there is no volume. Unless the Ukrainian attacks on Russia stops, and there is apparently some pressure from the US and Ukraine to slow down the attacks on the Russian refineries, because the price of refined products that the consumer pays is dependent on the refined product market and not on the crude market.
And to be sure, Fereidun, when it comes to diesel, the demand is inelastic. It is in just about everything, including agriculture, including heavy trucking. What are you making of the demand that we're seeing right now?
Well, if you look at the diesel demand has less elasticity, but gasoline demand also is quite strong, stronger than people expected. But generally speaking, we are losing about 1.5 million barrels per day of demand this year. We were expecting 1 million barrels per day of growth, so the net change is huge. Demand disruption is huge. But the demand is destroyed in some products faster than the other products. So I think that really the barometer of what is happening in the market is to look at the cracks of gasoline, diesel, and jet fuel compared to the crude oil. And you can see those cracks are expanding.
And I would imagine, Fereidun, in the end, this is inflationary. Are we perhaps underpricing the impact on inflation?
I think so. I think that all the discussion is that the Federal Reserve is going to raise interest rates. So President Trump appoints somebody that he trusts to reduce the interest rates, but they will be forced to increase the interest rates simply because the inflation is apparent and in front of us. And people are fed up with inflation, and it plays a big role in terms of the midterm elections. So there is going to be an impact on politics and on economics. But the impact is definitely going to be, impact on the pump is going to be felt by the population.
I want to touch on China. China's refinery runs are pretty much recovering. Do you expect China to perhaps import more in the fourth quarter due to this?
I don't think so. Somebody was telling me that funny story. Said China is now a mini OPEC in terms of withholding demand. And they don't withhold it to raise prices, but they're withholding it to reduce the prices. 1 million barrels per day previous imports of oil for strategic storage has stopped. Exports still are allowed, but at a lower volume. And there are policies in effect which reduce consumption. So about 2.5 million barrels per day easily can be identified that China has reduced the offtake. So because of that, China's role is the most important in the whole world today in impacting the oil demand and in impacting the oil price.
Do you expect China to re-enter the market? What would it take for China to re-enter the market?
I think the low price of oil. The Chinese always have prided themselves that they have bought oil for strategic reserves and for the market when the prices are low. Low price for them is $65 to $70 a barrel. At these prices, they won't enter the market. They will hold back. And in fact, it's quite interesting that they are sitting as a big buyer, and all the sellers are going to go and ask them, please buy some volume from me. And the Chinese play hard to get. So they really have had a huge impact by not rushing to the market and by not pushing the prices any higher.
And if it does tap the market again, Fereidun, it'll be for Saudi and UAE supplies, you think?
Well, they can't get hold of any Iranian crude because the U.S. blockade is stopping the Iranian crude. And as I mentioned earlier, the Iranians can't go without any revenues at all. But if the Iranian oil comes out, of course, they would take it. At the moment, yes, it's mainly for Saudi and for UAE. But they also would be willing to take more U.S. crudes. But the big supply, 1.5 million barrels per day of volume from Iran, has been cut off at the moment.
Fereidun, before we let you go, what's your oil projection for the end of the year? Where do you see oil prices?
I think oil prices, crude prices, maybe still in the range of $85 to $100 a barrel, but the product prices in the range of $150 to $250 a barrel.
Fereidun, always a pleasure to have you on the show. Fereidun Fesharaki, Chairman Emeritus of FGE NexantECA. Now here's a look at Indian markets just ahead of the open. Stocks coming online in a few moments, just as the rest of the region grapples with a chip sell-off. The benchmark Nifty index will be in focus today after falling for a sixth straight session on Tuesday. We're also watching shares of Tata Group companies after we learn its privately held company Tata Sons deferred its annual general meeting on Tuesday. Sources tell us the AGM failed to assemble a quorum. The conglomerate is preparing to find a new chairman following N. Chandrasekaran's resignation just last week. Tata Consultancy pointing to higher open, up 0.6%. Also on our radar is Indian biotech giant Biocon. Its stock popped on Tuesday after one of its products targeting autoimmune disease received supplemental approval from the U.S. Food and Drug Administration. I spent a day with Biocon founder and executive chairperson Kiran Mazumdar-Shaw for the next edition of Latitude. We spoke exclusively about drug pricing, the race for the GLP-1 market, and India's need for biotech sovereignty in its AI future. And here's a preview.
I've built Biocon on a very strong sense of purpose, which is really about building a world-class global leader in the biopharma space. I really want to help patients around the world with high-quality products and, drugs that make a difference. I mean, I want to help healthcare systems around the world to cope with these crippling costs of drugs.
You've been pretty critical of Western companies, which I suppose put a lot of emphasis on margins. And you say that's not how it should be.
It's not about margins. It's about the fact that we are a humanitarian industry, right? We are here to serve patient needs. We are here to improve the health of the planet. And you are developing drugs that save lives. Now, if you're going to restrict those drugs to only people who can afford it and charge such a hefty price point that most people can't afford it, then I think you're not really true to your purpose. So I think as a driving purpose, I've always tried to disrupt this model, which was always about low volume, high value, and turn it on its head and say, if profits are only driven by high price, then that's a different model. My profits are driven by high volume so that I can serve more patients. It's not that I'm less profitable, but it's just that I'm expanding my access by making it more affordable. So to me, affordability has nothing to do with being less profitable. It's about what is your business model, what is your what is driving profits?
And that conversation in full on an all-new episode of Latitude premiering tomorrow here on BloombergTelevision.com. Subscribers can also watch online at any time. Now, still ahead on Inside, India's National Stock Exchange is seeking a valuation of as much as $55 billion in what could become the country's largest IPO on record. We'll look at what the listing could mean for capital markets and global investors. This is Bloomberg. Welcome back. You're watching Inside. India's National Stock Exchange is set to be seeking a $55 billion valuation in its planned IPO. We're told it has marketed shares at up to 2,100 rupees apiece during meetings with potential investors. Bloomberg Asia Equities reporter Ashutosh Joshi joins us for more on the debut. It is a huge NSE debut, Ashutosh. Just how excited are the Indian markets about it?
Yep, thanks for having me on the show, Haslinda. NSE remains, the IPO of NSE remains the most watched event in Indian markets this year, even though in India's broader markets haven't done well so far this year. But the ECM, the equity capital market activity, remains pretty robust with large IPOs continuing to come. And in recent months, we saw some of recent debuts did well at the opening. NSE is commanding a valuation of around $55 billion, which puts the exchange at par with some of its global peers such as LSE and NASDAQ. Obviously, this valuation is backed by the strong growth potential exchanges in India have. We already have a BSE Limited listed, and NSE, the bigger player, will be looking to debut most likely next month.
As you said, ECM activity has remained pretty steady, but the secondary market has underperformed the last 2 years. How are we reading into this too?
Yeah, to a certain extent, the robust activity on the ECM side has impacted the secondary market with a lot of liquidity going towards new issuances as well as companies undertaking institutional share placements. However, that demand remains very firm. India has a pipeline of more than 70-80 companies which are waiting for IPOs, and going ahead looks like this will hold firm.
Right. Ashutosh, before we let you go, Adani shares are doing pretty well despite the struggles in the Indian markets. What's going on there?
Yeah, Adani conglomerate has been exceptionally well in terms of stock performances. Their flagship firm, Adani Enterprises, is best performer among Nifty this year, even though the benchmark index hasn't done well. The recent gains followed a number of positive developments for the group, starting from easing of their legal challenges globally, as well as their businesses such as real estate and aviation, which is airports, are continuing to do well.
Ashutosh, thank you so much for that. Bloomberg's Asia equities reporter Ashutosh Joshi in Mumbai. And that is it for Insight. Horizons Middle East and Africa is up next. Do keep it here with us. This is Bloomberg.